Hey everyone, welcome back to the channel. It's been a minute since I've made a video. A lot of life events recently. Started a new job, bought a new house, and found out that the wife and I are expecting our first child. I'm planning to start making more videos more frequently again, so make sure to stay tuned. Today, I want to talk about a topic that I think for some is common knowledge, but for new investors might be a bit foreign still. That's earnings calls. So we're going to cover three things today. What is an earnings call and why do we care as retail investors? What to look for and what to watch out for. And lastly, we'll take these items that we discuss and apply it to an upcoming call for Apple. And I'll talk about what I'm going to be looking for during their Q4 call on October 28th. So let's hop in. What is an earnings call? Well, it's a quarterly call held by companies that are publicly traded to discuss their most recent quarter's financial results and business operations. Every call across all companies will follow a very similar pattern. It starts with some legal disclosures, moves over to a management team discussing the most recent quarter financials and operating results, and that'll mostly be handled by the CEO and CFO of the company. And then that section, after it completes, there'll be a live Q&A where analysts from investment banks will ask questions, and we'll talk more on that in a minute. So why do we care about these calls? Well, as a retail investor, you don't get the same access to management to hear their thoughts and about how they're running the company outside of these calls, really. It's also just a great way to get the most recent financials and more context on what's driving these results. Some leadership teams will also provide guidance for future quarters during these calls. So now the last thing I want to hit on here is how do we actually access these calls? So every publicly traded company should have an investor relations website. If you Google the company's name followed by investors relations, it'll bring up their site and it'll have a section for upcoming earnings calls and sometimes recordings of past calls as well. And don't worry if you're unable to dial in live, there will most certainly be a transcript posted online shortly after the call that you can read through if you can't find the recording of the call online. And let me show you real quick for Apple. So what you'll type in is Apple Investor Relations, this website. It'll take you here and you'll see the first thing they actually have is investor updates, fourth quarter results, Apple's conference call to discuss the fourth quarter results, October 28th, 2 p.m. Pacific, 5 p.m. Eastern, and a link to listen. And I'll have more instructions on how to dial in when the call goes live. So now let's move on to what we look for and what to look out for during these calls. I personally find the Q&A session to be the most interesting part. This is where research analysts from various investment banks will call in and ask questions they find important. I think this is a tremendous resource as a retail investor. These are people that are paid to spend every hour of every day following a select set of companies, and they publish reports on how they think they'll perform in the future. The questions they ask are usually asked for a very specific reason, and they're trying to figure out a specific thing around the company. And trying to put yourself in their shoes and figuring out what these banks are actually looking and thinking about for these companies can be very insightful for your own modeling. The next thing I really look for is context around the recent financials. What's the real driver? Is it a new product, a large customer, expansion into a new market, something like that? I also want to try and understand how operations are going. Is there a backlog? Is there disputes with suppliers? I think Peloton was a great example of this during the pandemic. They had a backlog and were unable to scale with demand. And also, this is just a great opportunity to learn about any kind of new fundamental changes to the business. Is there any large litigation that could impact them, any new patents, any new product developments, things like that. And now let's move on to what to watch out for. So companies will almost always beat earnings. So if you read the headline, it'll say Apple beat earnings. Don't fall for it. See it way too often. People think Apple beat earnings, the stock is going to soar. And that's just not always the case. Now, if a company misses earnings, figure out why. They almost always beat. So when they miss, that can actually be a big news cycle. And I think, beating earnings though, Tesla's a great example of this. They beat earnings recently by selling Bitcoin, or they beat by selling regulatory credits. It's a game, it doesn't mean much. You can definitely Google both of those scenarios and read more about it. But don't put too much weight into a company beating earnings. But with that being said, let's take a step back real quick and discuss what it means to beat or miss earnings. So remember those analysts asking questions? Well, they also publish a report. You probably won't get access to this unless you have a lot of money or a great customer of your bank. And in this report, they'll have a DCF that'll have kind of future earnings for the company based off their models and their projections. So sites like Yahoo, Wall Street Journal, and Bloomberg will compile all these research reports and estimates and publish a consensus number. Basically, it's the average. And once earnings are announced, They go ahead and look and they see, did the company beat or miss this consensus number or not? Companies play a game and they'll give guidance that is low, knowing that Wall Street will kind of put, a little bit of a premium to their guidance, and then the company will still come out and beat the consensus number from Wall Street. It's all a big game, and don't fall for it. But let me go ahead and show you real quick how you can find the consensus number. So if you go back to internet browser and if you head on over to Yahoo Finance, pull up a company ticker, and if we pull up Apple, you're going to go over to the finance or the analysis section, and you'll see here earnings estimates, right? So there's 27 analysts at investment banks with an average earnings estimate of $1.23 per share, a low of $1.05, a high of $1.35. So if Apple is to beat earnings, it's going to be, did they beat this average 123? And I think Wall Street Journal actually has a better view of this, and I think you can access it for free. Go to their, if you just type in like Wall Street Journal Apple financials, it'll bring you to the overview page, and then you'll hit the research and ratings. And what you'll see here is the blue line is the consensus analyst range, and then the actual is the dot. And you'll see Apple has beat earnings every quarter for the last year. And I would expect a similar trend to continue. Anyways, let's go ahead and move on now. So the next thing I want to talk about is the stock is going to be very volatile going into earnings, and it's not going to always go where you want in the short term after earnings. I've seen a ton of times a company beats earnings and the stock drops. It's because it's all a game, and Wall Street knows this, but retail investors may not. The stock price, if we believe in valuations, though, shouldn't be based off earnings in the past, right? We're building on a DCF and projecting future earnings. So beating earnings, while it's great, it's only good if it's sustainable and is actually going to impact our future projections more than we previously believed. Otherwise, the stock really shouldn't change. So we're looking for fundamental shifts in the business that are sustainable in the long term if we want to see actual increased valuation. So now let's transition over to the upcoming Apple earnings call. There are a few things that I will be looking for so that I can update my Apple model. So the first thing is the top line revenue and the driver of it. What's the split here between products and services? Are we seeing iPhone sales as expected? So Apple usually has 2 cycles. They release a new design phone, and then a year later, the same design of phone with a slightly changed camera and screen. So are the sales for this upcoming quarter aligned with where they were the last time they were in the same cycle? And I believe they recently launched the iPhone 13, which is kind of a redesign or a improved iPhone 12. So seeing if those sales of the iPhone 13 are in line with the last time they were in a similar cycle. Next, I want to know if wearables, aka the Apple Watch, is still growing strong. This has become kind of their second largest revenue driver in the hardware section, and I want to see continued strength there. And then the last thing I'm going to be concerned about on revenue is the geographic sales. Is China still growing? I think it's a huge market with a lot of potential that's not fully tapped, and I want to see continued strength there. Then the big thing I think I'm really concerned about, though, is services. How is the service revenue doing? They recently had a change in their policy that was a result of their Epic Games lawsuit. And is this going to have a material impact on them? They removed the 30% App Store fee for media companies. So I want to understand what's the actual impact of this new policy. Is it final? Is it set in stone? Is leadership still considering to change it? Anything around that. And understand, is it negatively impacting revenue by a large percentage? Next, the last thing I always kind of listen for is dividends or buyback policies. I don't expect anything from Apple in this call. They usually announce it, I believe, in their April call, but you never know. So always kind of keep my ears open for that. And then the last thing really is being able to get that recent filing so we can actually update our model accordingly and just read through it and get a little bit more context on how the business has been doing recently. So that's all I had today around earnings calls. I hope you found this useful, and thanks so much for tuning in, and I'll be back shortly with another video. Appreciate it.